As always, guys, this is just for entertainment purposes only. This is not financial advice. Hey guys, and welcome back to my channel. We have to talk about Palantir because the stock has been devastated since the earnings. Look at that. Here was the earnings date, and we've seen some pretty huge drops, bringing back the price of the stock back to $11. Year to date, we are down 40%, and 1 year in the past we are down 62% from its highs. Even we are nearing the IPO price right now. So what is going on with Palantir right now? Can we have a look and see? And that's why this video is. I want to look what are the biggest arguments from Palantir's opponents in 2021 not to buy the stock, and despite of the current price share falling, we want to see, combined with that fall of the share price, did those arguments change? So I listed them here. Situation in 2021, reasons not to buy Palantir, or maybe to buy Palantir, I don't know. First one, we see the CEO, Alex Karp, Papa Karp, is selling shares. He's selling shares. He sold massively in 2021 for tax reasons, but it's still hurting the stock price like hell. Let's be honest about that. Second argument of bears is that Palantir is too focused on government. Third argument, low international growth. Fourth, we have a share dilution from Palantir. Fifth, unprofitable, too high P multiple for current inflation areas. So we're running a 7% inflation. What does it mean, 7% inflation, guys? If you're planning to have 100 million of profit in 10 years, that profit with the current inflation would only be like half or something. So investors are only prepared to pay a smaller amount for that company. And then unrealistic growth expectations of 30% a year. So some bears have said that was unrealistic. Then actually these are more in favor of buying the stock. That's that all the global tensions, Ukraine, Russia, China, and the supply chain issues, these are actually things that will give customers a reason to buy Palantir if they can afford it, of course. And then the technology, I think really, I looked a lot into technology. I work in tech. I think Palantir really has amazing technology. I think they're making operating systems for companies, and you can't really deny that it is the best in the world. So I want to just go over the red flags and see if they changed in the current situation. So first is the insider selling. So what we saw is all 2021, we saw massive selling. Yes, they are tax related, but we can't deny that they hurt the stock price, especially in the current market. If there is no buyers and there is this amount of sellers, then the stock price goes down. So we saw indeed Karp has been a monthly seller of his shares, but we did saw indeed that we haven't seen any new sellings for Karp. But they did say that the selling would continue, but we can see it's been a much smaller amount. We're looking at maybe 10% of what it was in 2021. So that's a positive thing. Now the second thing, to focus on government. So let's look at commercial growth. We're seeing a massive and increasingly accelerating commercial growth. So it reached 132% growth number. So I mean, that's massive. And we also see a fantastic retention. So I mean that companies are happy with Palantir. They like Palantir. However, and this also needs to be noted, that the commercial sector is still only 13% of the overall revenue. So even though it's currently growing on a massive scale, it's still only 30%. At the same time, the government growth has slowed down to, I think, about 26% quarter over quarter this year. So that makes, of course, people wonder, can Palantir keep this up? However, should the commercial growth continue to accelerate and even expand, it will overtake the government growth in about 2 years. So at that point, the commercial growth would become the most relevant. So that's a really good thing. Next is low international growth. I think, yeah, I think that's something where Palantir used to say, "Oh, we don't have salespeople." Well, now they have salespeople, a very large sales crew, and they hired Philippe Mathieu as president of Palantir EMEA. He used to work for Oracle, and he is hired to drive and build and scale the sales organization across the region. Card cannot be everywhere at the same time, so they need a sales team. And they again say that Palantir has become the operating system of choice for enterprises, and the demand is growing exponentially. So they're very positive in this one. Next, share dilution. I want to recap actually the Q1 earnings. In the Q1 earnings of 2021, so almost a year ago, they also asked the question about shared dilution. So here they say, can you expand on Palantir's stock-based compensation? We have, and here they answer, we have very low dilution when looking at a fully diluted share count. And they also say, fortunate here they say, oh, so yes, we plan to continue granting equity to our employees and providing them opportunities to share a meaningful upside in the company to order to maximize your shareholder value. That was 1 year ago. The stock was at an all-time high. We've seen by now that it has not really maximized our shareholders' value because as much as we're willing to invest if the underlying value of the company goes up, if the share price goes exponentially down, then we do not like this at all. And here they also say they're kind of pushing the dilution away in the long road. They're minimizing it. They do say at some points they want to get away from dilution, but they're not making anything. They're not stating anything. Now, I can imagine, like, if I was an employee of that company and I was paid for a big part in shares, and those shares went down 60 to 70%, I would not be happy. And I think they're not really only hurting the shareholders with their dilution, they're hurting their own employees as well. So I think the argument of the dilution, that it's to keep important people in the company, I think it's not really valid right now. And when we're looking at their Q4 earnings call, one thing that was positive, that Papa Carp, he is, as they call him, he is back in the earnings calls. He wasn't in the Q3 earnings calls. It was a big argument for the tanking of the shares. So where's Papa Carp? So he is back, and he is again, he's minimalizing the dilution a little bit. He says we're not issuing a lot of new shares. I think it's like the $9 million range. He's not really stating if it's per quarter or per year though. And he does go a little bit further and says there will be a normalization that will get us into a range where we would see a software company within the next 18 months to latest 2 years. But he's not really specifying anything, so he's not, you can see the sentiment compared to 1 year ago, it changed for sure. So they're now more aware that dilution is hurting the stock price. But they're not stating a timeline on when it will change. They also don't really say what you would see in a software company. They don't say what that means. So I'm not a big fan of this statement. I also had a little bit the idea that he's going away, moving around the topic, and he's not really answering the question clearly. But it is better than 1 year ago. But it looks like we'll have to wait another year for things to actually kick in, or maybe the share price has to drop more. Hopefully not, but let's see. And then the next one, unprofitable and too high PE multiple for current inflation. As I said, future earnings, future revenue, if there is a high inflation in the market, that doesn't count for that much because your future revenue is being eaten away by the inflation. So I want to look at the financials. So what do I see here? We're seeing that the net income, of course, it will continue to grow. Let's look at the revenue first. So we currently have revenue of 1.5 billion. Keep in mind the current value of the company is 27 billion. So we are trading at a price of 20 over sales still, which is high, but it's more reasonable than it was in the past. And we can see that revenue will grow to 4.4 billion if the calculations of 30% growth per year are correct, if those assumptions are correct. So it's still a really, really nice growth by 2025. Also PE, currently there is no PE in 2021 because the company was not profitable. But if the income predictions would be correct, we would go to a PE of 54 by the end of 2022. Is that reasonable? That depends on the growth, depends on the dilution. To be honest, if Carp had said on the call, we're stopping dilution completely, or we will buy back shares of our company and we'll give these to our talented engineers, then I probably would have said that the current growth number is reasonable. So I'm a little bit disappointed that dilution does not end. I think we're also going by 2025 to a PE of 27. I'm estimating something like that. Could be also 25, could be also 30. And that's, again, it's at the current share price, so if the share price doesn't change. And the question is, like, after that, what will happen? I think this is still a very high PE, even for a technology company. We have Meta or Facebook trading at a PE of less than 15, I think, right now. So that means that Palantir is still very, very highly valued, even after the share price, the stock dropped. And I think a really good, I keep saying it, but I think they should have said we're stopping the dilution, and that they're going to wait another 2 years. That's a risk for the share price. So, and we can compare Palantir as well with Amazon. Amazon has also been trading at a very, very high PE throughout the years. So we're seeing all the way through 2018, all the way to 2021, 2022, a very high PE ratio. Of course, you can say, that was the market then, and this is the market now. Is it comparable? Yes, maybe. I really don't know. I think a PE of 50 is indeed more defensible than a PE of 0, like we're seeing now. So it's possible that the share price will at least start to stabilize at this point. And hopefully that's when we see a really big, we see a repeating growth of the commercial, that the share price will really start to pick up again. So let's come together at situation 2022. So the high P, the director selling, it's lowered, it's not gone. To focus on government, so we're seeing huge sales expansion plans. We're seeing very large commercial growth in 2 years. I think the commercial growth will overtake the government. Low international growth, so you see we have a sales team coming in EMEA. Share dilution, to be honest, like, I'm doubting, will it go orange, will it stay red? Put it on orange because there is some plans to lower it, but there's nothing concrete. I mean, it almost deserves a red. Almost deserves a red. And then the PE, it's coming down to a reasonable level. I mean, 54. 54 could be accepted by the markets, but it really depends on the market and the inflation number by the end of the year. So we'll have to see about that. And then, yeah, by 2025, a PE of around 27, which is very reasonable at current growth rate. The unrealistic growth rate, which was one of the arguments of the bears, but it grew in 40% in 2021. For me, right now, this is proven growth. Palantir has proven that it can meet the expectations here. The current international tensions, supply chain issues, Palantir sales are benefiting from supply chain issues and international tensions. And tech, yeah, we know it remains a world leader. It has no competition. Guys, if you're a shareholder in Palantir, I hope this will give you a bit of hope that things are improving. The areas are improving that could benefit the stock price. If you're thinking to buy Palantir, please do your own due diligence. I am not providing any investor advice. I could be the village fool telling you fairy tales. Do your own due diligence. If you like this video, if you want to see more about Palantir, my opinion, I'm definitely keeping track of this stock, definitely looking at the earnings. Please like, please subscribe, and see you next time. As always, guys, this is just for entertainment purposes only. This is not financial advice.